Take a moment, look at the disclaimer. This content is for educational, informational, and entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to spread the word on how BTA analyzes the market, how we look at the market. This is Rod from BTA, and we are known as the middle traders. Now, this is a part 2 of our weekly walk with the market. You know we have to walk with the market. We have to stay in step with the market. That's our highest probability. That gives us the highest probability, the biggest chance of winning if we can stay with the market, because 75% of all stocks follow the major market indexes. So we're going to follow it too. We're going to walk with it. We don't want to follow too far behind it, because then you're late. I keep telling you, by the time you hear about it on the news, it's too late. By the time you hear about it on the news, it's too late. You don't want to walk too far behind. You don't want to get too far in front of it, because you might think you see something, go run into that pile of cash that you think you see, give out of gas, and don't make it there. So don't get too far in front of it. You just want to walk with it. Stay in step. Okay. This is our daily chart of our Fibonacci levels. We know these algorithms. We know tons and millions of traders all across the world look at the fibs. So we got to look at it too, so we can know what they see, know what they know. We got to keep an eye on everything moving. Okay. Here's the Dow Jones Industrial Average, the actual index itself. And this is our Fibonacci retracements for the daily chart, daily Fibonacci retracement, okay, of the Dow Jones Industrial Average. And what we did was we took the high, the most recent high from that consolidation phase we was in, right, to the most recent lowest low before we went on our rally over the last 2 weeks, right? A little run up. So we put the Fibonacci retracements from there, and we're going to measure the move and see where we at, okay? But for right now, this is our starting point. We pulled it down to this lowest point, and as you can see, the market rallied right up to this level, which is the 61.8 retracement level. So this is the collapse. And then the market retraced, went back up. It retraced this move. This move from here to here equals 100%. The 100% from here to here, the downturn. It retraced. It went back up 61.8% right here. And then it collapsed, okay? But what is the 61.8? Well, look. In between 61.8 and 76.4, right in here, we call that the golden pocket. That's the golden pocket. When prices get back into the golden pocket, that can act as very strong overhead resistance or very strong support levels, depending on the direction of the trend or the swing. So for right now, we were trying to go back up to the highs. We got right to the bottom of the golden pocket, the 61.8% retracement level. We went back up 61.8%, and then it got rejected and turned back down. We got rejected right before we got into the golden pocket. If we would have gotten to the golden pocket, I would have been looking for this to be some very strong resistance. Okay, but we retraced and we failed right at the 61.8. Okay. Right at the 61.8 is where we got resistance, and then it collapsed last Tuesday. That was last Tuesday. Okay, so right now, as of Friday, we just got back above the 38.2% retracement level. Well, it may go back up and start testing the 50% retracement. Okay, so we got to see what's going to happen now. Are we going to get rejected at the 50% retracement level, or is it going to make it back through and try to go back and retest this high here where we got rejected at the golden pocket? My next area of interest, when I'm looking at to see how the market reacts, how the Dow Jones reacts when it get around the 50% retracement level from this move down. I'm watching that level. I'm watching the market as it rally back up to that level. What is it going to do when it get to the 50% retracement level? And that is at 31,462 for the Dow Jones Industrial Average. That's 31,462. Okay, so now let's look at the Standard & Poor. Okay, the Standard & Poor 500. And let's see what the daily fib is telling us. We got on a daily chart, Fibonacci levels, retracement levels on a daily chart. Okay, what is it telling us here? Let me just move it over a little bit more, make sure you can see it. Okay, so let me zoom in on this here. Let me zoom in on it. Okay, so right now we got the same retracement from the high of the consolidation, the same measure, the same move from the high of the, that we measured, from the high of the consolidation area up here to the most recent lowest lows, where we had 2 days of lows right here. Okay, right around the 3,600 level. Okay, so that was our measurement there. What did we do? We retraced it almost 50% exactly. It ran up and it got consolidation right inside, right outside the 50% retracement level. Okay, so, and then we got rejected and we traded back down. Now we're testing 38.2 level again from the downside. That's the next resistance area. If we could break above that, I want to see how it's going to react when it get back around its 50% retracement level. Is it going to get above it and try to get into the golden pocket, or is it going to get rejected, fluctuate around the 50% retracement level again, and to get rejected? All right. Well, the 50% retracement level for the Standard & Poor 500 is right around the 3,900 level. We are right above the 3,800 level right now. So the 3,800 level was a key area on our structural chart that we was watching, right? 3,800 level. We were fluctuating up and down around that level. Well, if we get above that, then we know the 3,900 level is going to be the next area of really, really concern, of real interest. The 3,900 level, because that's the 50% retracement of this move on the Fibonacci. You can see for 3 days, we stalled right around there. Okay. What's going to happen? We don't know, but we have to just watch and see. The charts are going to tell us. Keep your eye on it. Watch it. It's going to tell us. Okay. This is the area, 3,900. 3,900 is the area we got to start having some interest on the Standard & Poor 500. Now, if we get above this here, 38.2%, right around 3,800, 3,843, right? If we get above 3,843, 3,850 level, now you see this gap right in here? Maybe we'll fill that gap. If we fill that gap, that's going to take us right back to the 3,900, the 50% retracement level. So are we going to fill that gap? Okay, that's an unfilled gap on the way down, right? Right here. This is the unfilled gap area. We gap down here and we gap down here. These are unfilled gap areas right here, okay? So it's still unfilled on the way back up. We gap down. We still didn't fill it. Well, we did fill it. I apologize. We filled the first one. It's right there, okay? We filled it right here and we got rejected. So I apologize. We did fill it. So here is a gap. We filled it right here. It got rejected and then it collapsed. So is it going to fill that gap again? That's the question. But it did fill it. So I apologize. Sorry, it did fill it. If it's going to fill it again and get back to the 50% retracement, well, I don't know. We're going to watch the chart, okay? We're going to watch the chart and see. But 39.09, if we could get above the 38, just say 38.50 level, which is the 38.2% retracement level. If we could get above that right here, then the next area of interest would be the 50% retracement, which would be the 39.07 level, right around 3,900 for the Standard & Poor 500. We got to watch those levels. Let's see what happened. Okay, now let's look at the NASDAQ composite. See what the NASDAQ composite is telling us. Look at the NASDAQ composite. Let's expand this a little bit so we can see it. Okay, let's try to zoom in a little bit. Oh, sorry about that. Let's try to zoom in a little bit here. Okay, so with the NASDAQ composite, we had the same thing. We went from the previous high of the consolidation area, back when we had that consolidation, to the most recent lowest low. And what did we do? We retraced that move. We got above the 50% retracement level. We retraced that move, but we ran right into the bottom of the golden pocket, just like the DIA did. The DIA got right into the golden pocket and right to the bottom of the golden pocket. For 2 days, we tested the bottom of the golden pocket, the 61.8% level. The golden pocket is in between the 61.8 and the 76.4. We got right to the lower level of the golden pocket and it got rejected. We came down to around the 23.6 level and we found support. Well, now we got to see if we could get back above the 38.2 level, which is right around 11,235, and to see if we could get back and test this 50% retracement level, which is 11,442. So that's the levels we got to look at for the NASDAQ. Those are the levels we need to look at for the NASDAQ. But once again, the bottom of the golden pocket held as resistance. We didn't even get into it. If we'd have got into this golden pocket area, I would have been looking for some consolidation and maybe a lot of resistance inside of here, because the golden pocket can act as a lot of resistance, okay? A lot of resistance. So those are the levels for the NASDAQ composite. We need to see if we get above this 38.2% retracement level, which is at 11,235. That's the first area of interest as resistance. And then the next level will be the 50% retracement level, which is right here at 11,442. Okay, we found support right here. When we tried to come back down, we found support right at the 23.6. So let's see what happened on the Fibonacci, but for the NASDAQ composite. So now let's look. So as you can see, the golden pocket held tight for the Dow Jones. The bottom of the golden pocket, rather, the 61.8% was rejection area for the Dow Jones and for the NASDAQ, okay? For the Standard & Poor's, we just barely above the 50% retracement level, all right, before it got rejected. So let's see what happened. See how this looks when the market we get some market movement next week. Let's see. It's going to be a short trading week next week. So, and we got a lot of economic news coming out next week. Please look at the blog. Go to the website, browntradeacademy.com. Look at the blog. We got a lot of news coming out next week. And Wednesday, specifically on Wednesday, that is going to be a really big news day. Be careful. The market could go on some wild swings starting on Wednesday, okay? But look, here's the IWM. We went from the high of the previous consolidation to the most recent low, and we retraced almost exactly 50%, and it got rejected. Last Tuesday was the day. Last Tuesday got rejected and it sold off. We came back down to right around the 23.6 retracement level. So now the question is, on the way back up, can we get back above the 38.2 and start testing the 50% retracement level again for the IWM, which is right around 176.86, okay? 176.86. The 38.2 retracement level, that they're going to be the next area we need to get above, is at 173.54. So we get above 173.54, I'm looking for the next area of interest to be 176.86. So that's the IWM. That's the fib level for the IWM on the daily chart, okay? On the daily chart. So right now, to sum it up for the daily chart, it's all about getting back above and staying above the 38.2 retracement level for almost everything, okay? 38.2 retracement level, getting back above that, holding support at the 23. We don't want to break back below the 23. If we could get above the 38.2 retracement levels, then it's the 50% levels that we're looking as our next area of interest to go back to. That's the daily chart. All right, the fib for the daily chart, the most recent downswing. Now, let's look at the fib levels for the weekly chart. This is a weekly chart, long-term weekly chart, going all the way back. This fib This fib calculation is from the March 2020 lows to the recent high in November on the weekly chart. So going all the way back from March 2020 to November, okay? Going all the way back to from March 2020 all the way back to November 2021, basically, okay? That's where we at. That's this measurement. Look what happened. From this move, from here all the way up on this move, we retraced it. We gave back, in other words, almost 50%, almost 38.2% of the move. 38.2% of this move has been given back. We stopped right at the 38.2% retracement level, 38.2% retracement level. And it's very interesting that 38.2 retracement level is right around this big, thick red line right there. You see that big, thick red line? I know you see that big, thick red line. Okay? March 2020 highs. So the 38.2% retracement level, where we stopped at, okay, is right around the March 2020 highs, this big red line. And if you notice, we stopped there almost to the T on Wednesday. Okay, let me zoom in so you can see that. How many times have you heard me say almost to the T? I'm telling you, don't let nobody tell you that these lines that we drawing don't mean anything. The problem is they don't know how to draw them. We see what they see on Wall Street. We see what the algorithms see, the computers see. They're trading on these levels, y'all. The problem is most people don't know how to draw them. Okay? You got it? Almost to the penny of the March 2020 highs. Almost to the penny it traded to last Wednesday, and bounced Thursday and Friday. Almost to the penny. This March 2020 highs for the Dow Jones is a very strong support level. I keep telling y'all that. How many times have I said that big, thick, red line right there? How many times I keep hollering this to y'all? I'm trying to tell you something. Hopefully you're picking up the jewels that I'm dropping. Can you hear me? Do you hear me? Holler back at your boy if you hear me. The March 2020 highs. Do you get it? When we broke above this high, look how we fluctuated right around it. And then boom. We done come back and tested it and bounced. Look, if we get a swing low, break back below this fractal, and break back below here, see what the momentum is doing, I don't know how low it can go. But I'll be looking for the 50% retracement level to be the next stop. Did you get it? Did you get it? If it breaks below it, I'll be looking for the 50% retracement level to be the next stop. Right now, we got down to the 38.2% retracement level, right back to this big, thick red line right here, and we bounced. I'm watching this. I'm watching this very closely. The follow-through, they got a 50% chance of failing, and then it went up to a 90% chance of failing, which means we're going to go back to the low of the first day rally attempt, which means we got a problem. If we get that swing low and break back below the March 2020 highs, it could be a problem. Okay, look at part one of Walking with the Market. Look at the end of day analysis for July the 1st. Daily and weeklies. Got key levels. All right, this is the Standard & Poor's 500 with the weekly fib. The weekly fib going all the way back from the March 2020 low to the November highs. It has given back 38.2% of this move. We got right to it. Flux broke below a little bit. We're right at 38.2% of it right now. The 3,800 level on the Standard & Poor's. Okay, We haven't made it down to the 50% retracement level. We broke below the 38.2% retracement level, but we stalled right in here and it bounced. Okay, can it hold support at the 3,814 level, which would be the 38.2% retracement level right here? Can it hold here? Can it hold this fractal? This fractal is dang near to the penny of the 38.2% retracement level, 3,814. Do you see it? Do you see it? To the penny? To the penny? Okay? The fractal on the 38.2% retracement level. Where did we close at? The fractal. Okay? To the penny almost. Please. Come on, y'all. Men lie, women lie. Numbers and charts don't. Bottom line. Okay? Hope you're picking up the jewels that I'm dropping. Now look, if we break back below that and we start getting a swing low, get back below here. Now we wrap back into lower lows and lower highs. Maybe we're going to go back and test this 50% retracement level. Well, that'll be the next stop I'm watching for. We break below that, then it's this big, thick red line right here. This big, thick red line. The March 2020 highs, 33.93. We break below that. I don't know how low it can go. We'll look at it when we get there. But I'm telling you, watch the 38.2% retracement level, which is 38.14 for the Standard & Poor's 500. If we can't hold support there and we keep breaking back below this, and we start getting a swing low right inside here, breaking back below these lows, look, I'm telling you, be careful. This is the weekly chart. This is long term. Be careful. See this fractal right here? See this fractal right here? I'm going to put this line right here for you. See that fractal right there? Be careful. 37.15. 37.15. Somewhere right in there. Be careful. It's this old man named Arthur Cashin. Arthur Cashin. It's an old man. He got to be like 85, 86 years old, something like that, still on Wall Street. Just last week, he was hollering that his level that he's watching is 37.30. If we break below 37.30, it might be a problem. It's what Arthur Cashin was saying. I don't know where in the heck he got the number from. But I got a lot of respect for the man. He's a great technician. And he's an old guy, been around for years. I don't know where he got the number from. Have no idea. But I know where I got my number from. I got my number from this fractal right here. Okay? That fractal right there for the Standard & Poor's. You see that low? For that fractal right there. What's that low? 37.23. 37.23. He said 37.30. They like the big deal in big round numbers. 37.23 is where I'm looking if we break again. Right here, okay, Friday, last week, Tuesday, Wednesday, Thursday. Tuesday we broke. Wednesday we traded right down to it. Thursday we opened up at that level, traded up. We came back down, tested it on Friday, and got back up above the 38.2% retracement. So this is it. We break back below that 37.15, 37.23 level, okay, and we get back down here and get below that 36 level. Well, I would not be surprised, okay, I would not be surprised if we don't test the 50% retracement. Look, See this next fractal? Right from right here. Look at these old fractals. Look. These are long-term fractals, y'all, going way back to 2020, 2021. You see these fractals? Look at these levels. If we break that, I wouldn't be surprised if we don't go back to the 50% retracement level on the Standard & Poor's, which would be 3,504. We have to watch these levels. If we could hold support at the 38.2% retracement level, maybe we can make our way back up. Okay, back up to here, which is a 23% retracement level for the Standard & Poor's. Back up here, which is 41.98. Okay, those are levels that we're watching for the Standard & Poor's. Let's look at the NASDAQ. Look at the weekly 50% retracement level. That's where we at. Okay, we wrap back below this 50% retracement level. We tried to get above it on Thursday, tried to get above it on Friday, got rejected. We're back below it. 50% retracement level of this move from the 2020 lows to the November highs. We already gave back 50% of the move on the NASDAQ. So if you was crazy enough not to take some profit up here when this thing was falling apart, if you held this whole time, you gave back 50% of the money right there. Okay? See why Neil said he don't be holding stuff if the chart's breaking down, he's out? Okay, well, let's not go there. But look, this is the 50% retracement level right here. We're back below it. Is it going to hold as resistance and collapse? Or can we get above it? That is the question. That is the question. That is the question. Remember these fractals, okay? I suggest you look at the weekly analysis that we do, because I'm not making this stuff up. I know a lot of people don't like to look at weekly and monthly charts, but did the price action almost stop to the penny of these levels? Did the price action almost stop to the penny of these levels? Be careful, okay? But if we can break below them, it might be a problem. So right now, can the NASDAQ get back above the 50% retracement level right here? Can it get back above it and start moving up? If it can, maybe we could go to the 38.2% retracement level up here. We'll have to see. But right now, we got resistance at the 50% retracement level. If we can't get back above it and we come down here and start testing these levels, then we got to see what's going to happen, because we might be getting down into the golden pocket, and then we'll be testing this big, thick red line. This big, thick red line from the March 2020 highs. And that's 9,848, the March 2020 highs. So for the NASDAQ, can we get back above the 50% retracement level, or are we going to peek our head above it and collapse again? But if we start breaking back below these levels, just say the low of last week, if we start breaking back below the low of last week, well, who's to say that we won't test the low of 2 weeks ago, which is right around 10,500 for the NASDAQ? Who to say it won't happen? And if we break that, or the only thing you can hope for at that point is the 61.8% retracement level, which is the beginning of the golden pocket. But if we break that, then you might find support inside the golden pocket. Plus, you got this big, thick red line that can act as support. Maybe that'll hold it. But if we break that, I don't know how low it can go. Okay? All right? Start breaking all that. I don't know how low it can go. You see the weekly levels on the NASDAQ composite. You see the Fib levels, 50% retracement level. Got to act as resistance. IWM. We close directly on the 50% retracement level. We went from the March 2020 low to the November highs. That's the move. We gave back right now 50% of the move. We at 171.41. The 50% retracement level is at 170.08. We broke below it for 3 weeks and got back above it. We tested it, broke above it, tested it, got back above it, tested it, got back above it. Okay? So you see what's happening here. We're fluctuating right around the 50% retracement level. You see this? You see this? Pay attention. IWM, you see it. See these here highs? You see where price fluctuated? Okay, right back here. Look, 1, 2, 3, 4 weeks. You see it? It's a level. Look where we tested it. Look where we at right now. We tested it 2 weeks ago. The 50% retracement level is where we at right now. We got to hope that this holds support and bounce. If it does, maybe we could get to the get back to the 38.2% retracement level right at these fractals right here. That's what we have to hope for and see what happens. But if we break back below it and can't get above it, and we break back below this area, well, you got to hope that this fractal will hold it. But if it don't, I'm going to be surprised if we test the top of the golden pocket, which would be right here, which is the 61.8% retracement level, which is 152. So that's what the IWM is at a either take a dump or get off the pot moment. Okay? Take a dump or get off the pot and start moving. But we know, because the numbers don't lie, that we got a 70, 80, 90% chance of retesting the lows. Be careful. Be careful. We spent a lot of time on these Fib levels. The computers, the algorithms, they see this stuff. Don't get caught. Please don't get caught. You see these levels. Pay attention. This is not financial advice. But wouldn't it be wonderful if it was? Well, what if it was? But it's not. But what if it was? You will not lose a lot of money. See you in the next video.